why does this market continue? And my answer is profits. Profitability for American corporations is the benchmark, the bedrock of stock prices.
Always.
And profits are going to be held by AI. That's why we're going to go higher. Do you agree?
I agree with you, and that's not because I'm sitting next to you. It's because we've been saying this. Earnings ultimately drive stock prices, and if you look at the earnings growth rate since this bull market began, earnings growth has driven 75% of the gains in the stock market. Oh. Everyone likes to point to the high valuations and say it's multiple expansion. It's really earnings, and profit growth is supposed to be double digits in Q4 and Q1. That's going to drive the stock market higher.
And AI is behind that profit growth, some of it.
100%. I mean, if you look at AI is driving the economy, and now you're seeing it drive gains, you're seeing revenue happening for all these AI companies, it's going to drop to the bottom line, too.
Oh, I like your Friday morning style. You could stay there for the hour if you would.
I appreciate it.
Much. All right, now this.
And then with NVIDIA, it's two very simple things. One, NVIDIA invested in Intel, which obviously the U.S. government cares about deeply. I think they'll get, as a result of that, NVIDIA will get the rights to ship a version of Blackwell to China imminently. And the second thing is all these circular investments, which right now people are willing to give companies the credit for, like NVIDIA did with OpenAI for $100 billion, that's not in the numbers. So both of those things should result in estimates getting revised higher and analysts, reiterating their buy ratings. And if you look at the multiple for the growth rate it's at, it looks very reasonable. And for right now, people want to believe. And I think that'll keep the stock moving to new highs.
And by the way, I'm not ashamed. I have a whole chapter about NVIDIA, and I met so many NVIDIA millionaires. I met millionaires when I did my book signing last week for Barnes & Noble. My wife has mezcal, and people come when I do bottle signings, and they're NVIDIA millionaires over and over and over again, because we discovered the stock when it was $3.
Well, we also remember when you named your dog NVIDIA as well. I remember that one. Right?
So sure. I met someone yesterday who said to me, look, I want to thank you. I took $10,000, everything I had. I said, oh, that's dicey. And bought NVIDIA when you named your dog after him, and now I'm wealthy. And I was like, I know he was near tears to tell me, but that's okay. That's the way it is. I met a police officer the other day who told me he made $1 million in NVIDIA after I named my dog NVIDIA. This is fine. This is what I want. 1 out of 5 can be speculative. Or I just want people to realize that they're not. So it's not, first, it's not that hard. And second, the street looks down on so many people. And I hate that. And I've been on Wall Street for 42 years, and I cannot stand how people are denigrated or looked down upon, except for the rich people. Everybody has a right to this information and to learn how things are done. And our viewers deserve to be treated better than just saying, oh, look, you can't figure it out, you should do index funds, which is the prevailing view on Wall Street, and I despise it.
Well, investors have a hard time in the middle of this excitement distinguishing between the good ideas and the bad ideas. And so that's also probably happening today. But it doesn't mean that anything that's happening isn't real. Like, AI is real, and it is going to change every industry.
That was Amazon founder Jeff Bezos, of course. He was in Italy today speaking on whether there's a bubble forming in AI. Let's welcome in Toney. He's Plexo Capital founder and managing partner with me here on set. It's good to see you.
Good to see you.
What do you make of what Bezos said?
I think what he said is spot on. I truly do believe that this is a boom time for AI. But the question becomes, and we talked about this with your colleague John on Overtime, what's the analogy here? Is this, more of a build out of the dark fiber that unfortunately the WorldComs of the world were not able to benefit from because they went bankrupt before, and then Verizon picked up those assets, and that became the backbone that drove growth in the internet for 20 years, right? We're still benefiting from that. So that's the real question. The revenues are real, right? When you think about the .com companies, this is not a Pets.com 2.0. I mean, we've got over 20 billion in revenues just from Anthropic and OpenAI alone. And then the question just becomes, how far ahead of the demand are they building out that capacity?
So it's real, right? Everybody agrees that it's real. But the other point that he made I thought was interesting, hard to distinguish between the good ideas and the bad ideas.
That's right.
Just because it's real doesn't mean that all this money going towards every idea is going to pay off.
Yeah.
And it's really hard to distinguish as an investor which will be the best bets, and the ones that aren't are going to lose, and they may lose big.
And they may lose big. And I think David Solomon made a similar point earlier, the CEO of Goldman Sachs, because when you have these types of platform shifts and this amount of real that generates a lot of enthusiasm, you have a lot of folks trying to hitch their wagon onto that bandwagon or on that ship. Right? And so what you have are a lot of companies trying to add in AI. And so what you're going to find is that there'll be a lot of losers as well. There will be massive winners. And I think we're going to see one of the greatest accumulations of capital generation within our lifetime over the next 48 months, potentially. The challenge is going to be, to your point, how do you tell what's real?
Well, you have an interesting perspective on trying to make those determinations because you're at the earliest, maybe not the very earliest stages, but close enough of deploying capital in this area. I mean, how are you, as a venture capital guy, trying to figure out what's real and what's not, or what's good and what's bad?
The good news here is that we have the ability to see revenues ramping incredibly in a short period of time. If you think about Anthropic, one of our portfolio companies, it went from 0 to 100 million in 2023. In 24, it went from 100 million to $1 billion. And at the midpoint of this year, it was already about 4.5 or 5 billion. That could be extraordinary if they hit 10 billion this year. That would be a 10x in the first 3 years, which is unheard of once you hit the law of large numbers. Another company where we're an indirect investor through one of our LP investments into a venture capital firm is a company called Cursor. And they are really unique in that they are able to generate computer code through their platform. Cursor has been reported to have been the fastest from 0 to 100 in ARR. I mean, they were able to do that in a little less than 12 months. And it's reported now that their revenue is about 500 million. So, you know, that's an incredible ramp over just a couple of years. So I think that's what's different, is that we're able to see these rapid ramps very quickly. And for those companies like Cursor, you know, they're really sitting on the application layer. So they're benefiting from all of the infrastructure that has been built out by the Anthropics and the infrastructure providers like the hyperscalers and, of course, NVIDIA.
You look at the Anthropics and the Open AIs. I mean, Open AI is at, you know, a $500 billion post-money valuation at this point, and that's only likely to get larger. If someone says to you, hey, Lo, is there a bubble in the private market? Forget about the public markets. How do you answer that?
So what I would say is, again, I think we do have a boom that's happening. However, there are things that look like a bubble aside from the companies that are hitching onto that bandwagon. You also have a little bit of a circular loop in some of these deals, right? So you've got some vendors.
People are bringing that up too.
That's right. That's right. So you can.
Is that a big concern to you?
It depends on how you want to frame it. And again, I would frame it with looking at the demand and how far ahead of that demand we're building out the capacity. Now, if you want to look at NVIDIA specifically and make that analogy back to WorldCom, what you would look to is that, well, WorldCom unfortunately had all of these startups that weren't really providing real revenue to be able to fund the bills. They were funding those bills with venture dollars, right? And so that's what we need to take a look at. We talk about Cursor, right? We can look at Cursor. Now, they're on a nice revenue ramp. So a lot of that's being funded through API usage for OpenAI and Anthropic from revenue dollars. And so what we want to be a little bit concerned about is looking at, are there real dollars? And look, the beauty of a company like NVIDIA, unlike WorldCom, NVIDIA will be around even if that capacity is being built out slightly ahead of the demand.
Some people are going to have a hard time getting around the idea of putting Jensen Huang and Bernie Ebbers in the same sentence. I mean, for obvious reasons.
That's right. That's right.
All right.
So a lot of these have already been hot trades, and I guess what we're trying to figure out at this point is what hasn't run, or if it has run, how much more is there? So are there certain parts of the data center, certain stocks that you see fit that category?
So look, I think what the street is missing is that before, right, the electrical stuff, the cooling stuff, they were basically commoditized, right? You know, generally, you know, you go 10 years ago, average data center was maybe, you know, I don't know, 10 megawatts, right? And it was running at 12 volts. And, you know, you had an HVAC system, you had electrical system off the rack. You know, the big guys really wanted that reliability, so they would go to top player. But the reality is, you know, nobody thought about it, right? Now an average data center is around 100 megawatts, right? The cost per megawatt is 50 million. So that's $5 billion enterprise. And all of a sudden, because NVIDIA has accelerated its product cycle, all of a sudden they're starting to do something very different with the rack. So all of a sudden, the HVAC system, the cooling system that you had before, is not going to work. All of a sudden, the electrical stuff, when they're going to go to the Kyber rack, you will effectively have to rip out all your electrical stuff inside the data center and put in brand new electrical equipment. You're going to go to direct current architecture, running the stuff at maybe 800 volts, 400 volts versus 12 volts,
wow.
right? And the problem, what NVIDIA is doing, they're completely re-architecting the rack. And all of a sudden, HVAC and electrical, which was an afterthought, right? Rubin Ultra is not going to work if you don't have the right cooling and if you don't have the right electrical connection. And just to give you a sense, we estimate roughly an average cost for data center, maybe 50 million per megawatt. So thinking about it, electrical, maybe 1.9 million out of that per megawatt. Cooling, 1.4 million. You mess that up, right? $40 million worth of chips per megawatt, pretty much burn within 30 seconds.
Wow.
So that's the big difference. All of a sudden, this has become the technology bottleneck without which NVIDIA's plan doesn't work.
So let's take, for instance, the poster child of cooling stocks, and that would be Vertiv. I mean, It's already seen a massive run. But from what you're describing, it sounds like the demand is going to be to the sky if you believe this AI trade is going to continue.
Well, not even to the sky, but we think the moat is going to get bigger. So what you had, our observation is you recently rolled out, there was a lot of talk about liquid cooling last year. And what happened with liquid cooling as we go to shows, what we're finding, the industry turned out really struggled was rolling out the liquid cooling product. And if you think about the liquid cooling product, it's a pump compressor, it's a heat exchanger. 70% of the, this cooling unit is really off-the-shelf components. And then NVIDIA gives you a pretty tight parameter how to put it together. You would think, as commodity product as they get, right? Well, it turns out people, when you put it in, people don't put in the right pipes. They don't install it right. They put in the filter right. And that's, you don't do that right, your uptime on your data center on all these pricey chips, they don't work as well as you thought. So, and the view is as you're going to do more cooling, more electrical, right? What the lesson people learned, it's such a small part of the overall data center cost. You better get it right, because if you don't get it right, the rest of it doesn't work.
Okay, so, and this is fascinating. So great to have you here again.
Thank you.
So this whole report is, let's take apart the data center, who makes what, who inputs what, and you're talking about bottlenecks. So to me, I'm thinking about two things only to oversimplify this. I'm thinking about who's got capacity that they can ramp. Of these input players, who's got capacity that they could ramp immediately? Who's got the ability to meet this demand or accelerate quickly, and who's got the highest margin?
They don't. The industry is busy adding capacity, and people complain about capacity. Industry is charging premium to sell to the data centers. Look, the lesson is what we keep hearing. The industry will go to the winners, the biggest suppliers with the best reputation. In our coverage, it would be Vertiv, Eaton, and obviously on the cooling side, the big players, the likes of JCI, Carrier, Trane. People are really worried about the sector being disrupted. We don't think it's going to get disrupted. We actually think the moat is going to get bigger because what really matters, you have to understand it, and it's really services, right? We talk to Eaton, we talk to Vertiv. When they take on these big contracts, what they really care about, will they be able to hire people to support, right, the infrastructure once it's out there? That's the moat, and that's who has it.
So that's the recurring revenue aspect. They're not just installing the system.
Correct.
They're maintaining it.
Right.
How about the power aspect of this all? I mean, to cool, to run, especially as as inferencing gets more advanced and more widespread, it consumes more power.
Yes, it does. Well, nobody knows how the industry is going to meet the demand, right? Clearly, we covered GE Vernova. When they got spun out of GE, the thought, we had a big debate whether the stock was going to worth 10 billion or 20 billion. It's a multiple of that. Part of what you have to understand is that actually AI demand is a relatively small percentage of the overall electricity demand growth in America. It's actually a bit of a perfect storm because we have reshoring. We have local regulations. that drive, all the buildings have to be electrical now. So it's a significant part marginally. These are the guys who can pay. But yeah, no, you're right. As I said, I started out by saying GE Vernova EBITDA is basically going to double between 25 and 27, right? And the industry, once again, services, installation, that's what really matters. So these are the big winners. And we think they're going to make more money than the street realized actually on services, because even though the bottlenecks are getting the new turbines out of the door, you can upgrade the existing turbines, you can make them a lot more efficient. So we think there's going to be a lot of that happening. And our colleagues have sort of written about the other aspects of the market, maybe smaller turbines that will come and play as well. So it's all of the above.
All right, I hope you're all doing great today. Really quick, I'm once again going to encourage you to research iron. There's a reason I keep pounding the table on this stock, and there's a reason the stock has moved higher following the company's most recent earnings report. I'm not saying the stock is going to go straight up. What I'm saying is that I think there is a lot of upside over the next couple of years, and I'm viewing this as a long-term investment. I seriously encourage you to research iron. There's a video of Iron's CEO posted on the channel if you want to know more. The Wall Street Journal is reporting that the deal between NVIDIA and the UAE is frozen pending U.S. investments from the UAE. I don't know if this story is correct or not. I'm just bringing it to your attention so that you're aware of it. I think this situation is likely to be resolved even if there's a small speed bump in the short term. I do not view this report as a major cause for concern. Now, I want to address the concerns about an AI bubble since it keeps being brought up by the financial press. While there are similarities between this AI revolution and the dot-com bubble, there are also fundamental differences in multiple key areas. I'm once again going to rapid fire multiple reasons why. First, the largest spenders in this AI revolution have the deepest corporate balance sheets on the planet. Second, the biggest spenders are primarily funding their AI investments by means of their own cash flows. That was not the case during the dot-com bubble. Third, the largest spenders in this AI revolution are not aimlessly investing in infrastructure in the hopes of eventually finding a use for it. They already have multiple uses for it, and they are investing heavily in an attempt to meet extremely strong demand from their paying customers. Fourth, the development of new use cases and mass public adoption of the technology are both going to happen much faster than they did during the early days of the internet, because the internet is already here, making new use case development and mass public adoption immediately possible. This drastically reduces the risk of long digestion periods and overbuilds of capacity like what we saw during the early days of the internet. Now, will there eventually be an overbuild of capacity? Possibly at some point, but I honestly think we are at least 3 to 5 years away from something like that happening, if it happens at all. Jensen seems to agree with this, given that he recently said on the BG Squared podcast that we will not hit a glut in demand for at least the next few years. This also lines up with what Microsoft CTO recently said at Italian Tech Week, where he said, quote, "We deployed an incredible amount of capacity over the past year, and it will be even more over the coming handful of years." And so again, I think we are at least 3 to 5 years away from a potential overbuild of capacity, but we may be even further away than that, given that new use cases are going to be developed over the coming years, and the development of new use cases will increase the need for compute even further. Right now, we are on the cusp of agentic AI going mainstream, and I think we will see a surge in compute demand fueled by agentic AI that extends well into 2026. But let's not miss the bigger picture here. We are just at the very early stages of the next wave of AI, which is physical AI. Physical AI is going to fundamentally transform society, and here's the point I want you to notice. There will be many, many new use cases developed as a result of physical AI. And again, more use case development leads to an increase in compute demand. All of that to say that I think we are unlikely to have an overbuild of capacity for at least the next 3 to 5 years. Demand is strong right now as a result of the current use cases, but there should also be many new use cases in the future that will lead to even more compute demand. And on the topic of physical AI, NVIDIA is positioning themselves as the underlying foundation supporting all of it. NVIDIA sells the systems where the AI models are trained. They provide NVIDIA Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. I think that most analysts are underestimating the long-term growth of NVIDIA's data center business, while also substantially underestimating the long-term growth in other business segments, such as physical AI and robotics. NVIDIA also has other large growth opportunities that they are really just starting to capitalize on, including sovereign AI, enterprise AI, which Jensen believes is an opportunity worth hundreds of billions of dollars, many AI-native startups, and quantum computing. Jensen told us earlier this year that NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. He also told us that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they're now going to do the same thing with QPUs. Again, this is another massive growth opportunity that does not get enough attention. Looking ahead, we have NVIDIA GTC in Washington, D.C. later this month, with a keynote from Jensen Huang scheduled for October 28th. Be on the lookout for any sovereign AI initiatives with the U.S. government development or large-scale projects with U.S. companies. I say this because Jensen usually announces large-scale projects that are unique to the region where the GTC event is held. And this event is being held in Washington, D.C. Jensen told us on NVIDIA's earnings call that he is anxious to share more details about Rubin with us at GTC. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.